Hi, everyone. My name is Brax Montier with UFLTV, and I'm here interviewing Derick Harris today. Do you want to introduce yourself, Mr. Harris?
Yeah, absolutely. Pleasure to be here, Braxton. Appreciate the invitation. My name is Derick Harris, and I'm a certified divorce financial analyst, CDFA for short. And I also have a 25 plus year background in the financial services industry in different roles. So I'm excited to join you and share my insights.
Wonderful. I think this is one of the biggest topics that people have questions about. It's one of the ones that people most fight over. So I have a couple of questions for you.
Yeah.
Uh, my first question is, how do you typically get involved in a divorce case? And at what stage of the process do you begin working with your clients?
Yeah, it's a great question. I mean, typically a CDFA, and I'm going to use that just to keep it shorter, is typically going to be involved in a little bit more of a complex financial divorce. If someone's been married for 5 years and all they have a house and maybe small retirement accounts and not a lot of debt, um, my expertise is not necessarily needed, but it's going to be the divorce cases where you've got marital property, you've got separate property sort of intermingled, you've got real estate involved, multiple pieces of real estate, maybe there's a small business. So the more complex cases on the financial side is where I can definitely add some value. And typically, when it comes to when is a good time to be part of that process, I've been brought in before even attorneys have been hired, depending on the client. But more often than not, getting a CDFA involved prior to the divorce decree is critical because at that point, some mistakes could have been made, and some errors in the financial side of things that could have been avoided to help ease the financial burden on both sides.
Okay. That's wonderful. What role does a financial advisor play in the division of assets? I know you said that if it's they've only been married 5 or 6 years and they don't really have a lot, you're not really needed. But when it gets really complicated and murky and there's a lot that needs to be divided, um, how do you help your clients make informed decisions about how the assets should be distributed?
Yeah, typically we'll look at marital, so assets that have been created during the marriage, as well as separate properties. So maybe assets that were part of the one individual or one of the clients is asset base. And what we'll do is we'll just make sure that those are properly separated. And then we'll look at them from a taxation perspective as well as an affordability perspective.
Yeah.
One of the things we want to do is make sure it's not always going to be a 50-50. It might not be one person gets the house, one person gets retirement. We really want to look at least from my perspective, and make sure that it makes sense for the client that I'm working with, that they're not going to be put in a position down the road where they can't afford the house or they've got no retirement. So it's really looking at it from the perspective of what is going to give my client the best solid footing post divorce so that they can have a successful financial future after that.
Yeah, it doesn't make a lot of sense to fight really hard for a house that you can't even afford.
Correct. Yeah. And sometimes that's important, is making sure that is asking the client, what's most important to you? Is it the house? Is it the retirement? Some folks, they say, well, I've been working my whole life, the pension that we've got is really important to me. Okay, that's great. Let's work around that and make sure that stays with you. Or if it's the house, let's see if that can be a reality, and make sure that it works.
Yeah. How do you approach the valuation of assets such as businesses or retirement accounts? And what challenges do you face in accurately assessing these assets?
More often than not, I mean, if there's a small business, it's really, if it's a really, if it's a small business that's fairly complex, it's been around for a number of years, both pre-marriage as well as during the marriage. That can get a little complicated, and typically what I'll do is, if I recognize that it's out of my wheelhouse, I'll bring in somebody who can do a business valuation for the team just to make sure that we get a real clear understanding. What it's also important is making sure that we're looking at all the financial records of the business. Not just the tax return, but looking at the profit and loss statement and looking at the
Yeah.
revenue stream and making sure we're getting a full picture of that business. When it comes to real estate, there's a number of ways you can do it. It's really either getting an appraisal, so hiring an appraisal, and each team may hire their own just so they get a picture, and or doing it through real estate agents where you can get comps of similar properties in the area that may have sold recently to get a real fair valuation of that. And then when it comes to the other assets, if they're not commingled, meaning there's no, if there wasn't assets that started before the marriage, it's a little bit simpler. But if there are assets, say in a 401k that were already there prior to the marriage, then we'll do some calculations to figure in some growth into that asset and make sure that those separate assets are fairly quantified and not commingled in with the marital asset. So it's not a cut and dry, just 50-50. There's definitely some things that will go into it that can make it a little bit more complex, but also making sure that everyone gets a fair split on that.
Wonderful. I know that that's a big concern that a lot of people have because there's always the fear, whether founded or unfounded, of somebody hiding assets or hiding money or squirreling stuff away. Um, and so being able to get an accurate picture of that is incredibly important.
And that's why we don't, at least I don't rely on just a tax return.
Yeah.
Everyone's trying to minimize their taxation, the burden
Yeah.
that they owe to the IRS. And so they're going to do everything they can to not pay as much taxes. So the tax return is part of the picture, but I want to make sure that we're looking at all the other financial documents to make sure that we get that accurate picture.
How do you help your clients understand the long-term financial implications of their divorce settlements, particularly when it comes to retirement savings, tax implications, and spousal support?
Typically what I do is it's not, I'm not going to look at a snapshot in time of where they are today. My background is as a financial advisor, which has a lot of planning involved. And so a big part of being a CDFA, a certified divorce financial analyst, is making sure that we have a plan in place and they're able to see, okay, what does this look like post divorce? And that's important from two perspectives. One, so that the client can feel a little bit more relief in saying, I'm going to be financially okay post divorce, but also helping them to see what decisions during the divorce are going to look like post divorce, whether it's keeping the house or not having any retirement. What does that look like down the line? And helping them, stick with that plan. So it's not just looking at a snapshot. It's saying, okay, we need to look at it from today's perspective and what does that look like 5, 10, 15 years in the future for you.
Wonderful. What are the common mistakes, the pitfalls that you see people who are going through a divorce make? I know planning is a big part of your background, but what are the common, just, oh, why did you do that? What was the thought process behind this?
I think there's two things. One is not being flexible in the division of assets. Putting your foot down and saying, "I need the house. I want the house. Period. That's all I care about." And that's great if it can work. Like if it makes sense, then absolutely. But if we're putting our foot down on something that's not realistic, you can't afford the house, or you've got nothing saved up for retirement. That may be shooting yourself in the foot versus being a little bit more flexible and seeing, okay, what's going to make sense for me post divorce. The other thing is quote unquote throwing in the towel, right? Saying, I just want this to be over. I'm tired of fighting. I don't really care what I get or what he gets or she gets. And I think that can be a little short-sighted and recognizing that, yes, it may be a little bit uncomfortable right now, but it's going to set you up in the future to make sure that you do get a fair split, not just throw in the towel and say, I need to be done with it. There's definitely a balance between those. Um, and sometimes I've actually been brought in post-divorce, working on a case where the client did not have a financial analyst on their team 14 years ago when they went through the divorce. And there's only so much we can undo on that. But making sure that there's no mistakes moving forward, like redoing a child support case or something like that. Making sure that that client, doesn't shoot themselves in the foot again and give up too much.
Yeah. Can you explain the tax implications of divorce settlements, um, particularly when it comes to like alimony, child support, and asset transfers? How can a divorcing individual minimize their tax burden from this?
A lot of these tax burdens are going to happen down the line. They're not necessarily a taxation hit that's going to be an immediate effect. It's typically going to be somewhere down the line when that asset is either used for retirement or is sold. And then it's important, as the financial analyst, is to look at the cost basis of those assets, whether it's the house, whether it's retirement, and making sure that one of the client is not taking on all of the taxable assets, and that they've got assets that aren't going to be a big tax burden. There are some tricks though, when dividing retirement assets. For example, if someone's got some debt that they want to pay off as they divorce, so that they're not burdened once when they're starting fresh, is there's some tax laws in there that allow you to take money out of a retirement plan that's being split, pay off some debt, and not get penalized with that 10% early withdrawal penalty, and just pay the income taxes. So there's some tips and tricks in there that we can do to make sure that the clients don't get a tax burden right away. But a lot of these tax burdens is just making sure that we look at cost basis, not just at asset valuation.
Okay. How do you handle situations where one spouse is more financially savvy than the other? And how do you ensure that both parties receive fair financial treatment during the divorce?
Yeah, it's a great question because inevitably one member of the family is more tied into the finances, whether it's paying the bills or, setting themselves up for, getting the retirement and doing all the investing. And typically, the client who is less financially savvy is going to be the one that's going to be hiring someone like myself, just because they don't understand and they want a trusted partner that understands
Yeah.
the ins and outs of the finances and can help walk them through it. Uh, and then it goes back to that planning piece that I'd mentioned just a few minutes ago. It's really creating that plan and having them to be able to see and visualize it in black and white so that they can see not just the attorneys and myself telling them this is what we should do, this is how it's going to look, is actually showing them on some reports that we can run that will show them, help them understand that tax implications, help them understand budgeting and what does their expense structure look like post divorce and what does their income look like. And so it comes down to really just being there as a voice of reason and helping them get educated on the nuances of the financial decisions they're making.
Right. What strategies do you use to help clients maintain financial stability after a divorce, especially if they're concerned about maintaining their lifestyle or supporting their children?
Yeah, so as I'm part of what I do is I'm a financial advisor. But as a CDFA, I've really separated those businesses because they are separate and distinct skill sets.
Mhm.
And so on pre-divorce, it's really helping them educate, setting up, a plan that shows them what that post-divorce is going to look like. What does their budget look like? What are their expenses? What does their income look like? And then post-divorce is when, I'm able to help them on the planning side more and just keep them tied to a budget, keep them tied to the plan so that they understand why they've got X dollars to spend or why we've got a house or what are we saving for, and just tie it back to a plan that we started before the divorce so that they understand why there are certain decisions and what's going to help them be successful on the financial side of things after divorce.
Cool. You spoke about uh, earlier when if there's something that isn't really in your wheelhouse, you'll bring in another professional to help you. How do you collaborate with other professionals, such as divorce attorneys or in a mediation during the divorce process, to ensure that a client is fully represented?
Sure. So, it depends really on where I am in the process. So if I've been hired by the client or the attorney, clearly, or the attorney for that client, clearly my position is for that client, right? So I'm working for that client as in the same capacity that the attorney is, and I'll work closely with the attorneys, as to the position that they've taken for that client and what they feel is important for them to really push for on the settlement, and making sure that that position is reflected in the financial decisions. It's also helping the attorneys understand some of those financial impacts. They've got typically a much better understanding than the client, but there's still some nuances that attorneys understand law. I don't. I help them understand some of the financial impacts that maybe they are not dealing with on a day in, day out basis. Now, if I'm brought in on a mediation or maybe in a collaborative perspective, I'm working potentially with both parties. Both parties may have hired me, and so from that perspective, what I'm doing is I'm working with the mediator and or the attorneys if it's collaborative, and making sure that we're all on the same page in terms of making financial decisions that are going to benefit both and not be a detriment to either one of the parties, and just working through that and making sure that we're all on the same team and working towards that goal, whether it's with the attorney and the client, or if it's more of a joint sort of I'm helping both clients work towards a good goal.
Right. What advice do you give your clients when it comes to managing or dividing debts in divorce? That's a big topic that comes up, is how to partition those debts and who gets what. And what do you do in the case when one spouse has significantly more debt than the other?
Yeah. So it really comes down to, I mean, like assets, debts are going to be split, um, unless it's a debt that was brought into the marriage prior to them getting married. So ideally, what we do is we're going to split the debts in a way that is equitable with the assets as well. Having said that, if there's one of the clients or one of the spouses that has a better capability or better earning potential to pay those debts and handle that service of that debt load, then that would be part of the discussion. Um, Outside of that, I had mentioned this earlier, was leveraging retirement accounts. So say there's a fair amount of debt that needs to be divvied up, we can leverage the 401ks or the retirement accounts, take them out prior to them transferring, pay off some of that debt. And that allows the client that may not have the ability to pay that or service that debt post divorce, just take care of it and get rid of it.
Well, that was the last question that I had for you. Where can people find you and your services?
Yeah, no, and again, I appreciate the opportunity to speak with you
Yeah.
and the audience. My company is called Fair Split Financial. Just as it sounds, it's www.fairsplitfinancial.com. So I can be found on the web. I've got an Instagram account at FairSplit as well as on LinkedIn at FairSplit. And feel free to reach out to me there. I've got a great website with a lot of information as well as my contact information. I offer free um, consultations. So there's no obligation to hire me. I'll chat with anybody and see if it makes sense to hire me. And if it does, great, we can move forward. And I work really well with the team that they may have already assembled, whether it's an attorney or mediators.
Wonderful. Thank you.
Thank you, Braxton. I appreciate the time and the opportunity to speak with you.